All right, guys, in this video, we're going to cover liquidity sweeps. And I want you guys to think of liquidity sweeps as fuel for the next move. For those of you guys that maybe don't understand the importance of trading liquidity sweeps or waiting for liquidity sweeps to happen before getting in a trade, the reason that it matters is because the market is only ever looking to do one of two things. It's either looking to sweep liquidity, aka grab people's money, or two, rebalance, which we're going to cover in the next video. But when you are waiting for liquidity sweeps, you are allowing the market makers, the big money players in the market, to move the market in a way that is going to allow them to fill their orders. And I guess if I were to break this all down into layman's terms, you have tons and tons and tons of retail traders. I believe the statistic is about 90-some% lose money, right? And how do 90+% of most traders, retail traders around the world, try to trade, right? They look at a chart just like this and they draw up support, resistance, trend lines. And how do they trade? They trade very objectively in the sense of, oh, once price gets back down to this low, look what happened last time, right? It went up. So when it gets back down here, I'm going to draw a little line right here, and then I'm going to buy when price gets down here. Well, it's really interesting because there's actually two scenarios happening at the exact same time. And let me break this down for you guys. So let's say people were looking to get long right here at this low, right? Somewhere in this wick. They just said, okay, this is support, right? So maybe they draw a box right here and they just say, okay, great. This is a support for us. And when price gets down here, we're going to buy and we're going to put our stop loss right on the other side of this low. So that's how most people are looking at a market. And sometimes that works, right? Because some people will make money with it in some way, shape, or form. But this is all playing into what the big money in the market is trying to do, and is trying to move the market this way so that way people can get in, so they can use them as liquidity, stop them out, but also get people into the market. Because even though there are some people looking to buy right here, guess what? There's also people looking to take the breakout. Some people look at the market the completely opposite way. Some people are looking to buy here. Other people are saying, okay, once price breaks through here, I'm expecting we're just going to keep continuing lower. Therefore, if and when that happens, I'm going to set a sell stop right here, or I'm just simply going to get in for a sell. And now this is where it gets really interesting, because smart money is very efficient. Right? Smart money a lot of the times will kill 2 or 3 birds with one stone. So catch this. So what happens? Obviously, I'm giving you guys the benefit of hindsight here, because I didn't go into replay mode or anything like that. I'm showing you guys exactly what I'm looking at on the chart. And so we already know how this plays out. I get it. But bear with me for a second, because price comes down. So now what? You've got people looking to get long here. People are buying. They're buying. They have either buy limits or they're market executing in this area. And then what happens? Price rips through, hits their stop loss, and they're out of the trade. And then a little while later, they come back, they look at the chart, and they see that price started to move back up, and they go, oh, I was right. It did actually play out, so maybe my strategy does still work. So they just keep doing that over and over, and then sometimes it works. Most of the time it doesn't. And then you have other people that said, okay, great, price went through. What did they do? You had people selling right here. Right? You had people getting in for shorts. You had people having their sell stops triggered, so they're getting put in the market automatically. And then what happens? Price runs back the other direction, and we already hit the people that were going long here. We got their stop losses hit, but then now you've got people that are losing money as price goes back to the upside. So you've got 2 birds with one stone being killed there. But either way, it's more money for the big banks and the hedge funds and the institutions to be able to fill their orders, because they're trading with literally millions and sometimes billions of dollars at a time. So they can't just get in and get out like we can as retail traders trading on, $100 account, $1,000 account, $10,000 account. It doesn't work like that, right? Our little bit of money is nothing compared to these banks and these hedge funds and these algorithms that have, like I said, millions or if not billions of dollars trading at a time. on a trading floor in a portfolio. So that's why all we are looking to do is ride their coattails and trade with them instead of against them, because we're not trying to be liquidity. We're trying to get in on the move with them. So here's how you can look at this, right? You see price run through, boom, grab liquidity, and then rips to the upside, right? So that is in a nutshell how liquidity works and how you want to read it. You can look at liquidity simply as old highs and old lows. And if you can get multiple lows together in one area, then that just means there's more liquidity. So it doesn't have to be a single low. It can be relative equal lows. It can be exactly equal lows. But you guys can see right here why this makes sense if you're thinking like a retail trader, right? But we're just looking to execute opposite of what they do when they look for trades in the market. And you guys will see this play out over and over and over again, where a low gets taken and then boom, the next move happens. A low gets taken, boom, the next move happens. And same happens vice versa, where a high gets taken, right? So right here we got some equal highs. We got a high right here. What does price do? Boom, runs up, grabs all this liquidity, and then breaks down and goes back the other way. And then what happens once it gets below these lows? Boom, moves back up. So it happens over and over and over again. You will see liquidity, guys, and you will look at it in the terms of lows and highs, okay? Lows and highs, old lows, old highs. That is what liquidity is. And when these levels get taken, that is our first indication that we can now start looking for a trade. You do not want to trade this just by liquidity sweeps. You do not want to trade any of these concepts only by themselves. You want to look at the market, and you see this happen, and now we can start looking for our other confirmations to start getting in for a trade. But this is our first indication that we could be setting up for a move in the opposite direction. And if we don't get our confirmations from this point, then we don't have a trade. But we'll get into that, into these other concepts in this bootcamp, guys, in the next video. But lo and behold, that is what a liquidity sweep is. And this is the first thing that we're looking to see take place when we are looking to get into a trade. And one thing to note here, just adding on to this as we go, when it comes to those pockets of time, what did we talk about? We talked about how in the macro times, we'll see runs on liquidity. Well, guess what is right here? We have the 9 a.m. Central Standard Time hour. So literally between that macro, where's that macro start? That macro started right here. So 8:50, price runs down, and after 15 minutes, remember these macros are about 20 minutes long, after about 15 minutes, we've swept this liquidity. In that last 5 minutes, what happens? Price comes back up, and now we're setting up for that move. So again, you'll see this start to play out over and over and over the more you pay attention to it, how price behaves during these macro times and how it will literally run on liquidity to set up that next move, guys. But hopefully this helps, and I'll see you guys in the next video.